Good afternoon, everybody, and a very warm welcome to Business and Brews, our new webinar event that we are conducting today on behalf of the Recruitment Startup Hub. We're absolutely delighted to welcome a huge audience today. We have nearly 50 participants that will be joining us today, and we look forward to sharing some thought leadership and hopefully some helpful guidance when it comes to overcoming growth challenges. Today's webinar is going to be all about how to overcome those pitfalls that you may face as you start to set up your business and grow to an established business. Today's session is being recorded. We will send out a copy of today's recording after today's meeting. And if we can try and make today's session as interactive as possible, that would be fantastic. I'm delighted to be joined by two great speakers today who have prepared some fantastic overviews in relation to some of the questions that you've submitted today, and we'll be grabbing some of that information from them shortly. But in terms of a bit of an introduction to who we are and what we do, my name's Vincent Seddon. I'm the Customer Director at Simplicity, and Simplicity have set up the Recruitment Startup Hub in conjunction with some fantastic partners, and we're joined by one of those today. The Recruitment Startup Hub has been set up to support businesses who are setting up in the recruitment industry, specifically to help them set up and be successful in their first 12 months and on into being an established business. We have had some great webinars that have taken place over the last 12 months, and this is the first of standalone webinars with some of our key partners that we'll be running today. As I said, we're going to be talking about overcoming growth challenges and supporting you and your business to accelerate moving forward. We're joined today by Gemma Powell, new customer manager at Simplicity in Business. Very shortly, she'll be providing an introduction. And we're also delighted to be joined by Stewart Roberts, Managing Director from Mayachi. So Stewart, as our VIP guest, do you want to kick off and give us a bit of an introduction in terms of who you are and what Mayachi is? And also, why did you come up with that name for the business?
Thanks, Vincent. I'm Stewart Roberts. I'm the Managing Director at Mayachi, and Mayachi, the name, everyone kind of thinks maybe there's a Japanese edge to it or something like that. But my son's name is Malachi and my daughter's name is Maya. So I just decided to amalgamate the two together, just to kind of make it a bit more of a family business. But Mayachi, what we provide is kind of non-exec finance director advisory services. So what I do is I come into recruitment businesses and I help to look at financials and try and obviously help agencies to A, understand their financials, and then B, give some help and advice on exactly what people can do to actually improve maybe their numbers just by understanding them. Really, that might be the end goal is selling your business. It might be on actually looking at accelerating the growth through additional staff or moving into new areas, maybe international business, and also the looking at kind of the back office and funding side of the business as well to make sure it meets the needs as the business decides to grow. So as I said, I've been in the industry for 24 years now in the back office funding side of the industry, and now I'm just providing advisory services, which is working out really, really well.
That's great. Thank you, Stewart. We're really delighted to be joined by you today, and hopefully we'll draw upon some of that experience as we move through the panel event. Gemma, a bit of an introduction from yourself, please.
Yeah, absolutely. Thank you, Vincent. My name's Gemma. I am the new customer manager at Simplicity. I have been in the industry and in the business, actually. I'm a one-hit wonder, if you like, at Simplicity. I've been in the industry for about 13 years now. Very experienced in sort of, the finance and back office side of the market. And, really just helping recruiters to achieve the sort of aspirations that they have, whether that be starting up their very own recruitment agency with the experience that they've sort of utilized through other roles, or if it is an experienced sort of agency already, actually achieving that sort of next level of growth. So, I've got a lot of experience in having different conversations with different recruiters around the UK that have kind of been in similar situations to hopefully our audience this afternoon. That's me in a nutshell.
Super, thanks, Gemma. So I'm sure the audience will agree we've got two fantastic panel members today, and we're going to try and draw upon your experience to share some of that with our audience today. So the way in which we're going to run the session today is very much in a traditional panel event. I'm going to be the host today, and I'll be asking various different questions that have been very kindly submitted by our participants today. But if anybody does have a question that they want to ask today live, please do put that in the chat function, and I will reach out to you and bring you live on stage to ask that question to Stewart or Gemma. So I'm going to kick off today with one of our questions that was submitted by one of our audience members. And Gemma, this question's for you. We're going to start with talking about general growth. What are the most common growth challenges that our recruiters face today from your experience?
Yeah, okay, that's a great question. I mean, from the different, the different conversations that I have, as I've already said, I do speak to sort of new start and established businesses. So quite a difference in terms of the spectrum of business, if you like. But I would say the most common sort of, the most common growth issues that people are facing at the moment are the state of the economy and the way that the market is at the moment. And just, some sectors are doing better than others or not doing so good as others, if you like. So I would say the sort of state of the economy and just the market in general would probably be one of the sort of biggest things. Talent as well, talent shortages. So, there's been, when we came out of COVID, I think, a lot of people were kind of saying that it was a sort of candidates market, and recruitment did kind of take a boom when we came back through from sort of, lockdowns and COVID and all that sort of jazz. But I think what we're finding now is that actually the sort of qualified candidates are few and far between. So I think that is quite a common challenge that people may find in terms of, being able to grow their business, is that, there are some talent shortages out there. There's, a lot of just actually, how do I get new business? So, networking, just how do you sort of differentiate yourself, I suppose, to other competitors that might be out there in the market? Because, there are so many different recruiters out there, and, so many new recruitment agencies set up as well on a weekly basis. So, how do you actually differentiate yourself to somebody else that might be specializing in the same sector, in the same geographical area? That's also something that I hear quite often is, what can I use as a USP, or, what can I offer that is slightly different to somebody else that's doing the same as me? So I would say that that's probably, maybe the three most common challenges that I would hear from the types of agencies that I speak to on a regular basis. I can't think of anything else off the top of my head. That is a great question, really putting me on the spot there. But yeah, I would say that those three are probably the most common that I would hear.
And I think what's interesting there, I mean, the whole point of today's webinar is about overcoming growth challenges. And I would assume that one of the main things that a business needs to do is either get more work out of their existing customers or get new business. And from the sounds of it, one of the key challenges is getting the new business. We can all upsell to existing customers, but how do we bring those new customers on? And I suppose that also links into the competitive landscape as well. So it's really interesting that you mentioned that, and I'm sure that that will branch out into a deeper conversation when it comes to how do we actually get that new customer base. But we'll save that one for now, because I'm not actually meant to be commenting, I'm meant to be the host. So I'll try and keep quiet as much as I can. Stewart, I'm going to come over to you next, if that's okay.
Just on that one, can I just give a bit more on that one as well? What I've seen from my agencies, what I've seen as well is one of the challenges that my agencies that I've been working with have seen as well is actually finding internal staff. So agencies maybe have been very successful in their first or second year of actually starting up and growing, but it's then they want to start actually getting to the point of actually becoming a bigger agency, and so taking on staff. Now, finding good recruiters out there to join an agency can be quite hit and miss. You might use a rec to rec. You might decide to take on someone who's a rookie and never done recruitment before. And both of those have different challenges. So if you're taking on someone who's an existing recruiter, you're taking on another salesperson. So they're going to be selling to you exactly how they believe that they are a fantastic recruiter. And you're taking on this person in the hope that they're also going to be able to take on your culture and actually the way that you want them to work. And if you take on a rookie, then you're taking on someone who's never worked in the industry before. And so you've got to take a lot of time and effort to actually train these people up. So finding those has often been a really big challenge. And it's about understanding not only obviously the time it's going to take away from you as the director or the owner to actually train up these people to get them to the level where actually they're going to be generating enough business to cover their cost, but it's actually, are they going to actually then, you know, if they're a brand new rookie, are they actually going to be right for your business as well? Because obviously it's a dog eat dog world still in the recruitment industry. You're either good or you're not good at it. So those are the kind of growth challenges I've seen from my agencies, is them struggling to find really good recruitment consultants out there that can actually join their business, or whether or not to go down the rookie route. So
yeah. I mean, just on that, sorry as well, Vincent, I know you are the host, but you probably find from talking to other agencies, it's actually retaining those top talent recruiters as well, isn't it? It's not just
yeah,
how do I get one in the first place, or how do I get a couple to expand my internal team, but it's actually how do you keep them? Because like you said, it is such a dog eat dog world out there in recruitment that, you know, if you're not an attractive employer, if that makes sense, then, you know, it's highly likely that those recruiters might only stay with you for a short period of time, and then they'll be off to sort of the next opportunity. So it's also the retention side of that, when it comes to, you know, your recruitment consultants, your internals.
definitely.
Key consideration for sure. I want to skip back before we go forward with another question. Stewart, you mentioned, which is why we ended up with retention. You mentioned about finding good salespeople. Do you have any advice or guidance, and this is maybe $1 million question, to our participants today about what should they be looking for if they're looking to recruit somebody into their team? What are the key considerations, or red flags even?
Yeah, I think if you're going to hire someone, you've got to be very clear on what kind of person you're looking for yourself. So are you looking for a copy of yourself, or are you looking for someone just to do? You have to make it very clear. Are they going to be coming in as a resourcer? Are they going to be coming in as a, you know, there is the kind of the 360 model, and are they going to be coming in as which part of that 360 model, or are they going to be coming in as a 360 recruiter in some respect? If you're going to be taking on that brand new startup person, you know, what's their previous industry, what's their previous experience? You know, I've been to seminars before where I've heard that the best people to get if you're going to be looking for a rookie is either someone who works in the airport, who kind of sprays you with perfume and things like that, because they've got the confidence to go up to those kind of people and actually say hello and try and get you to, you know, to kind of smell this perfume or buy this this item that they're putting forward. The other thing would be, the other person would be the telesales people, so people selling stationery online, printing services, photocopiers back in the day, you know, double glazing salesmen. But the one that always came out as the number one was sports people or ex-sports people, because sports people always have that kind of will to try and get to be number one. So if you can find an ex-sports person who you can train up, they will always want to be number one. And I always heard the story of an ex-racing car driver who got injured, couldn't do it anymore. He went in as a rookie and he looked at the leaderboard and he went, I'm going to be number one. And they just laughed at him. He did the 12-week training, and within 6 months, he was number one. He was number one on the list because that is all he ever knew. He only ever knew to be number one on the list. And so ex-sportsmen are, again, really good at someone who potentially you could take on as a good recruiter. But what you've got to make sure is you've got to obviously, if they are a previous, you know, they have been a recruiter previously, you've also got to do your due diligence on them. So you've got to look at pay slips. You've got to try and get things like understand what their commission scheme was, and see if their commission numbers actually stack up to what they're telling you. Because if they tell you that there's a £250,000 recruiter on the annual basis, but they've only received 30 grand's worth of commission, then either their commission scheme was complete crap, or actually they, you know, they're lying on how much they've actually billed. So you just need to kind of get your facts straight beforehand, because you don't want to take on a lemon because they've sold themselves to you and actually they're not actually that good.
It's really interesting that you mention sports people, because when I think back to successful people that I've had in my sales teams, quite often they have either been an ex-sports person or they have a hobby outside of work that creates that competitive edge. So yeah, I like that, and I definitely agree and endorse that. Gemma, have you got anything to add? I know you've done quite a lot of recruitment recently for your sales team.
Yeah, I mean, obviously what we do isn't strictly recruitment, so it might be slightly different. But, in terms of the sales team at Simplicity, I've always found that, the people that have got the work ethic are not scared of talking to, whoever it may be on the end of the phone. You can find those people in hospitality, people that are just dealing with, the common public sort of thing on a day-to-day basis. People that have come from like a retail experience, because there is obviously that level of customer service again. So yeah, I mean, I would kind of echo what Stewart said there. Sports people, I've got to be honest, I hadn't actually thought about it, but most of my previous and current colleagues have got a sports element about them. Like Vincent said, if they don't already play sports, they're kind of ex sort of sports people. So it's funny you should mention that. But yeah, I would say the common ones that I've always found are sort of maybe hospitality backgrounds, just anything where somebody is kind of talking to the general public on a day-to-day basis, or is already having to just sort of have that level of confidence really to put themselves out there, and wanting to be the best. So I guess you can it's quite a transferable skill really, isn't it, regardless of the sector. You can probably find that in a lot of different areas. But yeah, it's really interesting actually that you brought up the sports thing. But yeah, I would say that's my experience really, is the sort of hospitality and retail industries.
Okay, thank you. So drive, passion, and tenacity, I think, are the key things that are coming through there, with a little bit of competitive sport edge. One final thing to note there is one of the key things that I hear from experienced recruiters is don't try and recruit somebody that can be your identical twin. Think about your gaps in terms of what you need, and think about how you can put that into someone else, because otherwise you're going to be replicating the key qualities that you've got and still have the gaps in the team that you had already. So that's something else to think about. So Stewart, we're going to come over to you now for the next question, if that's okay. I want to talk about short-term and long-term growth goals. Quite often when we talk to businesses, you get a bit of an eye roll from MDs and CEOs that have been heavily involved with sales, because they like to talk about what's happening here and now rather than planning for the future. So why is it so important to have short-term and long-term goals, and how do you balance between the two?
Yeah, well, from what I kind of profess to my agencies when I speak to them is they've always got to have a goal. They've always got to make sure they know where they're going, because at the end of the day, that dictates how much money you are going to make as a recruiter, as a recruitment director, I should say, and how much money you want to take home. So you've got to know, first off, what your kind of break-even point is. If you're running your business, you've got to know what your break-even point is, and you've got to make sure at least you're hitting that as a minimum. So that's got to be your kind of, not short-term goal, but you've got to make sure that that's at least a goal that you're achieving on an annual, on a monthly basis or on a quarterly basis. Doing projections and having some kind of idea about what you actually want to achieve as a business, actually doing some kind of projections of what your sales is going to be, what your overheads are. By doing that task and then making sure it actually brings you the amount of money that you actually want to take as a dividend, or take out the business, is ideal. You don't want to have it that you only actually turn up, your sales, your net profit comes to something like £250,000. Your overheads come to £150,000. You're left with 100 grand. 20%, let's say, goes on corporation tax, and you're left with 80 grand, and you go, that's not going to make me £150,000 that I want in my pocket. So in some ways, you've got to work backwards. You've got to kind of find out what your overheads are. You've got to kind of work out how much money you want, and then that then works out your sales on the top line. So that's your kind of that's a kind of a semi-long goal in some respects. I also say to my agencies as well, you've also really got to think about the end goal. Every agency wants to sell at some point. There's always that kind of, you don't do it for the love, you do it for the money. And it's a case of, you want to come into this business where you actually set up a business, you grow it, and then eventually you will hopefully sell it. I know that it doesn't happen all the time. So you've got to actually start that process right from the very beginning of your business, because setting up the business in the right way and then actually fulfilling that goal of actually showing year-on-year growth. If you show year-on-year growth in your business, it's going to make it much easier to sell. It's going to make it much more appealing for that person to come along and actually want to buy it. So it's actually planning that growth, and it's actually making sure that you've got the goal of actually, what are we going to actually do to make us this money that we want at the end? If you want to sell your business for £5 million, okay, what do you need to know your EBITDA is going to be? What's going to be the focus of the business to actually get you to that point? So that's where I would sort of say is the long term, and the short term goals is it's about what you actually want to achieve and get money out of the business, because that is at the end of the day what you're doing this for.
Interesting. Okay. Definitely lots of food for thought there. And what I quite like that you did there, Stuart, is you put some practical advice and guidance around those two very common moments in a recruiter's life, in terms of sitting down and looking at those goals and actually turning it into, what do you want to achieve from a financial perspective? Because I would assume, or shall I say I would hope, that every business owner that sets up a business, the key thing that they want to do is earn as much money as they possibly can, and maybe one day have a plan to sell the business. So thank you for pulling that into that very wise piece of words. Gemma, do you have anything to add in relation to short and long-term plans?
Yeah, I was just thinking really about some of the, obviously the conversations that I do have with recruiters sort of quite often. I think for maybe new starts more commonly, everybody that sets up their own recruitment agency, or most of the time, has come from a recruitment background. And, everyone will sort of have these, a business plan. They'll have sat down, they'll have crunched some numbers, and they'll have an ideas to sort of milestones or goals, if you like, that they might have set themselves. But I speak to a lot of people that will kind of just say, I want to, if I can get to 20 temps out, on a weekly or a monthly basis by a certain point, then I'll be happy, and I can then think about the next steps after that. So I do quite often get new starts that will almost put, rather than monetary sort of targets on their head, their goals will be to just get X amount of temps out, or have billed X amount of perm invoices, or even both, if obviously offering both. So I think it is managing, obviously from Stewart's background, the financial side of things. Yeah, absolutely, very, very important. But I think for the recruiters as well, who at the end of the day are salespeople, having those little mini targets in place, which, if it is as easy, the easiest to be able to measure in terms of headcount, then just having sometimes those tiny little short-term goals that you can focus on can actually keep you motivated and keep you moving forwards until you're ready to sort of think, right, I've got to where I wanted to get to in the first 6 months. Now what do I do to get to milestone 2, sort of thing?
Great, thank you both. So we're going to move on now to a little bit more about the market and some of the trends that we're seeing. And we have got a couple of questions coming in, so I'll try and weave those in where I can. But I'd like to look at some of the current market trends and what should recruiters be aware of to stay competitive. So Gemma, I think I'm going to link this back to you, if you don't mind, because you spoke about being competitive when it comes to new business, but what do recruiters need to be aware of in the current market?
Yeah, I mean, there's a lot that recruiters have got to be aware of in the current market. I think, but to maybe get that edge and to try and stay competitive, there's lots of different things that recruiters can consider. I mean, if we're talking about recruiters with maybe their internal staff, it would be things like, offering the sort of remote and hybrid options to their staff, because that is something that is now more common than not in the market. So, you know, being able to have that flexibility and not having to always be in the office, you know, that might be something that would enable somebody to sort of be competitive. I think the use of AI and sort of, you know, the different sort of recruitment technologies that are out there nowadays, that is always going to allow somebody to stay competitive and have that edge, because as everything else does, the recruitment market is evolving. I mean, it's day by day, but it feels like it's minute by minute. So, you know, keeping on top of what are the most recent sort of, you know, recruitment technologies, what sort of softwares are there that are out there that can help people and to aid the process of, you know, the candidate experience, finding candidates, finding clients, you know, even screening and in the interview process. You know, there's AI and sort of, you know, digital platforms nowadays that can aid with all of those different sort of processes. So, you know, even considering that, or those sorts of different options, you know, that would always give you that competitive edge. What else can I think of? I mean, again, for the internal staff, it would be things like going back to what I said at the beginning, how do you make yourself that attractive employer? So, you know, what benefits are you offering to your staff? You know, the sort of, in general, the pay and benefit package, to obviously make sure that everybody is or you're being competitive with other sort of, you know, people out there in the market. So it's just trying to think outside of the box. And I know that is a lot easier saying it than it actually is, in terms of doing it. But it is just trying to think of something that is going to put you in front of everybody else. And, you know, nowadays there is a lot around, you know, looking after your staff, obviously having that, you know, the health and well-being sort of benefits from, you know, a mental health perspective. So, you know, what you're offering in terms of that sort of side of things to your employees. So yeah, there's lots and lots to consider. But I think they would probably be the main things, offering sort of the, you know, your sort of remote and hybrid, or at least the flexible working option, you know, making sure that you are an attractive employer. That's only going to aid the sort of candidate process. And then obviously technology.
Okay, great. Thanks, Gemma. Stewart, I'd like to stick with the same question, and just gather some of your thoughts, because I know when you work with your customers, you get below the skin and you have to get very involved with those customers to help and support them, because quite often it's not the problem that they foresee. It's something that you find through getting to the nitty gritty. So with that in mind, are you able to share any scenarios that you've come across that link back to some of the trends that we're seeing in the market at the moment that perhaps some of our audience might not be aware of?
Yeah, I think with all of especially the permanent only recruitment agencies that I've been working with recently, it's really is about trying to open up that contract and temporary market. It's about looking at, can you offer to your clients not just permanent placements? Because if an agency only offers permanent staff and can only offer the ability to place permanent staff, then it might be that agency is only getting 50% of the business from that client. If that client is also offering contractor roles, they might be offering it to another agency. And if that other agency is also offered perm and contract, and you're only offering permanent roles, then or filling permanent roles, you might actually be pushed out by the other agencies that are actually on the book. So looking at expanding into the contractor market or the temporary market, I'd always say the contractor market because the margins are always bigger, but obviously, you know, it depends on which industry you're dealing in. So definitely looking at moving into the contract and permanent market, contract and temporary market if you're only doing permanent placements. I'd also say as well, if you are doing current placements as well, look at the international markets. Really, the international markets, doing a placement overseas is not as scary as what you might think. It is still the same process that you need to follow. Sometimes there might be things like currency you need to be aware of. Sometimes it's in-country rules you need to be aware of. But there's lots of help and advice out there that can really kind of make sure that you're keeping up to date. Raising a permanent invoice to a European country, you raise the invoice, you send it over. It might be in a different currency, but you're going to get paid on it. and the margins are much larger. A lot of my clients at the moment are speaking about America. America is a real hot market at the moment for a lot of agencies, and UK recruiters are really making headway into the US market. Reason for that is there's about 36,000 recruitment agencies in the UK. There's 36,000 recruitment agencies in the US. So if you think about it, for the size of America, there is the same number of recruitment agencies as there is in the UK, apparently. So there is a big market that you can potentially go into by going to the US. And also in the perm market in America, that's what they're mainly placing. They're mainly placing permanent staff. So UK recruitment agencies are going to America and they're starting to offer them contractors. And these companies in America are going, I don't know how to do contractors. What's a contractor? How does this work? And so the UK recruiters who are used to doing contract placements are really going in there and they're making a big headway into these clients. And the clients are going, I don't know you. I don't know you. You're over in the UK, but it doesn't matter. You've got the staff I want. You know, the notice period in America is 2 weeks for every single staff. Any person who wants to work in America, they only have to give 2 weeks notice. So if you place that CEO, you know, on a permanent basis, they could give notice and they'd be gone in 2 weeks. Do it as a contract placement. You get a little bit more stability with the client. Yes, they're getting paid on a weekly basis, and there's ability to be funded in the UK. There's invoice finance companies, and there's ways of raising those invoices and getting funding on them on a contractor placement. But the margins are huge. You know, you're looking at between 25 and 35% margins. So why wouldn't you go to America and actually do that? So those are the two main market trends I'm seeing, that in order to keep yourself competitive and actually keep growing your recruitment agency, definitely look at contracting and temp if you're only doing permanent. And it's also looking at the international markets as well.
Really interesting advice there, Stewart. I think that kind of covers off the analogy of if you keep doing the same thing, you're likely to get the same output. And I think that was a quote from somebody very famous, and I won't try and remember who it was. I want to say it was Albert Einstein, but I might be wrong. But those two pieces of advice there are very common things that we're seeing. We're seeing that within our customer base, and we look after several hundreds of agencies within the recruitment industry. Going international is definitely an opportunity, but it's making sure that you've got the foundations in place to be successful. And then on top of that, absolutely, the perm recruiters having the ability to set up a temp desk and have that regular margin coming in on a weekly basis is your bread and butter, really, isn't it? So absolutely sound advice there, Stewart. Thank you for that.
What I would say on that, sorry, Vince, just one thing on there that I always say is, if you can get your contractor base to cover your overheads, then your perm is your bonus money in the pocket.
Absolutely. Yeah,
I think
couldn't
there's
agree
one
more.
other thing to actually consider as well there. Now that obviously you've mentioned it, you've got that sort of diversifying from perm to contract or all the other way around, but you've also got sectors. So, you know, if you've got sectors that there are quite transferable skills and, you know, legislation isn't necessarily that different, you could just actually look at offering a completely different sector, because again, you're opening the floodgates then to a whole new client base that could potentially double, you know, the amount of business that you're already doing. So, you know, it's not just the type of placement that you're doing, but it's also the markets that you're actually specializing within. So I think that's another thing to sort of bear in mind as well.
Yeah,
Absolutely.
I had a oil and gas agency that then started moving into renewable energy because the engineers on oil and gas were doing very similar roles on the renewable energy side. And it just opened up a new market, because that's where a lot of governments at the moment are investing in the renewable energy side, and less is being pumped into the oil and gas industry. It was transferring the skills over in that respect.
Yeah, absolutely.
Great. Some super advice there. Thank you both. Okay, so we did have another question that I think you may have answered slightly, Stewart, but I'm just going to ask if there's anything else you want to add. So the other question from one of our attendees was, how can recruiters adapt strategy to changes in the job market or economic downturns? You've given us a couple of great pieces of advice in relation to internationalizing your business and also pivoting into temps if you're just a perm recruiter. But is there anything else you want to add in relation to the economic downturn and how to kind of move out of that at the moment?
Yeah, the only other thing I would say as well is potentially looking at Gemma kind of said about it about moving industry, but it's also looking at always those the placements that are the next higher up. Don't ever think just because you always are placing people, say you're placing people in the construction industry and you're always doing trades and labor, that's where you got to stay. There's always, if you go to that next level up, so you go to the QSs, you go to the site managers, you go up to the next level and the next level. So it's always about trying to actually get to the next level. That then gives you that stability, because if it is a case of that the lower level workers actually all fall off the face of the earth, you've got that next level up as a protection barrier. So, it's a bit like as well, if you're doing an IT sector and you're doing a specific type of software, you've always got to really keep your eye on what's going on with that software, because you don't want it to be that software suddenly becomes obsolete and you've put all your eggs in one basket on it. So you've got to kind of have a look and see what's evolving in your markets and making sure you're keeping up with the trends in that market. I remember a recruitment agency I was dealing with previously, and they were dealing with a software that was going out of production. So it actually stopped selling it, and all they were doing was they were putting engineers in just to maintain it. But what they did was they just continued that trend. And then within the space of 3 years, they pretty much went out of business, because all of those clients were shifting over to the new software. And they were increasing the cost of their current contractors, because their contractors were becoming very niche. Obviously, there wasn't this software anymore, and there was only a few people that could actually maintain and monitor it. But they didn't actually start looking at the next bit about what software should it be replacing. So what I would say is you've got to kind of look at your sector and make sure it is future proof. And if it isn't, what can you do to improve that? And the way I would do it is look at the roles you're actually placing, and can you place other people within that industry at a higher level? Definitely work smarter, not harder.
I love that advice. Definitely work smarter, not harder, and don't end up being a busy fool, they say.
Exactly.
Okay, great. Thanks, Stewart. So we're going to talk a little bit more about talent acquisition and retention. So, Gemma, I'm going to come back to you to link in to some of the areas here. But then, Stewart, I'm going to also come to yourself, because I'd like to know from your perspective what financial considerations a business owner can have when it comes to shares and things like that. So, Gemma, we'll start with you first. What are the best practices for attracting and retaining top recruiter talent within the business?
Yeah, okay. I mean, I've touched on a couple of these things already in terms of pay and benefits, and obviously making sure that you've got, attractive packages on offer to anybody that you're potentially looking to recruit internally. I think sort of having those sort of clear pathways in terms of the actual career and the progression that you can offer within the business. So, that might be more applicable to a sort of an established business, but, it's always something that any director of a recruitment agency should be thinking about. Because, the one way to keep, especially these top billers, they're always going to want to do, the next step. They're always going to want to sort of have one up on where they were previously. So it's always thinking about, having those options available to your top billers, because at the end of the day, you've got to try and keep them and obviously make them want to stay. So, being able to do that would be great. Obviously training. So actually investing in sort of, professional development within the business. So, what sort of, training benefits can you offer to your staff to obviously make sure that, one, they're getting better and they're making you, they're billing more, they're doing more business, ultimately affecting the sort of bottom line, but you're also increasing their skill set so that obviously, you're keeping them sort of on board. I mean, I touched already on the sort of flexible working sort of arrangements. Obviously rewarding high performance. So if you have got your top billers, salespeople, whether it is specifically in recruitment or in any form of sales in general, sort of recognition and reward of when performance is where it should be or above. So, making sure that obviously that is something that kind of stays at the forefront of the mind. But yeah, I think it's making sure that you look after yourself. I think at the end of the day, you've got to treat other people how you want to be treated. Now, that sounds as though, is teaching people to suck eggs sort of thing. But as a director and as an employer, you've got to make sure that your team are feeling valued. They're feeling like, they are appreciated for the job that they're doing. So I think if you kind of pull all of those things into sort of one and you're ticking off most of those boxes, I think, your employees will feel the benefits of working for your business, and ultimately the retention will stay there. But you've always got to be forward thinking. I know we've mentioned it a little bit already, but what are other employers out there doing, other recruitment agencies offering to the consultants, to try and be that attractive employer. And it's just keeping up to date with that, I think, just so that you can obviously differentiate if you need to. So yeah, I think that would be kind of my advice really on retention.
Just one thing to add, I think there's a number of great pieces of advice there, Gemma, and definitely a lot of takeaway for our audience. One thing I want to just add to that is there is a huge percentage of employees, not specific to the recruitment industry, but across the board, that leave their job because of their direct line manager. So the biggest piece of advice that I would give, and I know I'm not here to give advice, but I desperately wanted to give you this advice, is when you are starting to set up a team, be mindful of the impact that you have as an individual. Yes, you can have a fantastic commission structure. You can give as many shares as you like, but if you are not a great individual to work for, it's highly likely that you're going to have a retention issue. So start as you mean to go on. Simple things such as thanking individuals for a great job that they've done, are going to be those moments that they will remember, and being upfront, honest, and providing great communication. You can never provide too much communication. So keep all of those things in mind when you're setting up your team, because if you don't do those things, it's highly likely that you're going to end up with a problem in your team. Stewart.
Sorry, one on there, just on that. I've noticed as well, and I've seen this when I used to run the back office of a large agency, and I saw this happen quite often. It was always the top biller was always then naturally assumed that they should become the manager of the team. It wasn't actually a discussion that was had. It was they're the top biller, so they then need to be moving to the next level, which means that they're going to be the manager of the team. Now, really, if they'd analysed that person who they'd actually thinking about, that person is the top biller, and all they want to do is they want to make as much money as possible. They have no interest in sharing. They have no interest in actually making money for other people except for themselves. So that person was not the most ideal person to put in as a manager. So I think what you've got to do is you've got to analyse whether or not the person, as you said, is the right person, because you want to retain the staff who's going to be underneath them. But you've got to actually find out what their motivations are for becoming a manager. If they put themselves forward, why do you want to become a manager? Is it because you just want the override on other people doing all the work? Or actually, are you going to just steal all of their jobs every time they get a new job in, and you're going to make the placement, get the commission, and you'll get a bit of override as well? Or is it actually they're going to want to grow the team and they're actually looking forward to becoming a manager? So I think you've got to kind of weigh up those options when it comes to, is the person right to be the manager? Because you don't want to get the wrong person, as you said, because otherwise you might end up losing all of your people at the same time.
Absolutely. And sticking with the same theme, Stewart, what advice and guidance do you have to our audience from a financial perspective when it comes to maybe offering shares or retention plan, that kind of thing? Could you share some advice around that, please?
Yeah, I think the rule I always say is it's easy to give away shares, it's harder to get them back. So giving shares away should always probably be your last option, if ever giving it away, really. You have to really trust that person. If you give away shares, or you can't give away shares, if your business has a value, then that person will have to buy the shares, because someone obviously will have to pay tax on them. So they've got to be done in the right way, using the right schemes. So you've got to potentially look at things like EMI schemes, so employee management incentives, which are schemes that you can set up that will give employees shares when you come around for selling the business. Now, those are all very good schemes. The only problem is with an EMI scheme is it only pays out if you sell your business, or if there's an opportunity where someone comes in with an investment or something like that. But if that if you sort of using that as a hook to kind of keep people in, but you never sell the business, then people after a while are just going to think those EMI schemes and those shareholding is just worthless, because they're never actually going to see the material money from those. So I would say that giving away shares is probably a last resort. If you do give away shares, yes, there is things like dividends and things like that. But as I said, you need to speak to your accountant to make sure that you're not just giving them away, because there's probably a value that you need to pay out for them. Look at EMI schemes, but it does kind of go across the whole business. So every person really should be on incentivizing the same way. Having different individual EMI schemes can be very expensive, hard to manage, and actually doesn't motivate anyone either. And it's only if you're actually looking to actually sell the business in a set period of time. If you say in 3 years' time we are definitely going to sell, then set up an EMI scheme to reward those staff members. But if you say, oh, in the future we are, and it's a case of you get 5 years down the line, it's not going to retain those staff members, because they'll just walk away going, I don't ever believe you're actually going to sell your business, or you will have the opportunity to sell. So I think those are the ways. I think if anything, it's putting correct commission schemes in place, bonus schemes to go along with that as well, but are the same across the whole business. You don't want to have it that one person's on one commission scheme and someone's on a different one, because unfortunately, if one person talks, then you have a mutiny on your hands, and then that actually again could force people to leave and say, actually, that's not for me. If you're giving him more than I'm getting from her, or something like that, it's a case of it just will demotivate people to actually want to do any further business.
Thanks, Stuart. Some great advice there. And I think sometimes we are very quick to give things away without thinking about the implications. It's a little bit like the horses bolted scenario, and then the action that you have to take to retract is sometimes more negative than one thought. Okay, so linking in from that, I'd like to get back to the growth element. We're talking about some of the key actions that we can take to grow our internal business in terms of people and getting them to perform, et cetera, et cetera. But when we talk about the actual business, sometimes we need to think about the cash flow requirement of the business in order to invest time where is needed to grow the business. And actually, is it wise to grow the business? Should we bring someone in? Should we have that extra outlay for their salary and commission and employment costs, et cetera, et cetera? What financial options are available to recruiters that are looking to grow their business so they don't end up with a negative cash flow before they've even got to a point of growth? Stuart, I'm going to come to you for that one, if that's okay.
Yeah. Obviously, the main way you want to obviously start your business and grow your business is hopefully do it from working hard and hitting those targets and meeting the demands of it. But obviously, sometimes you might want a little kickstart that goes along the way with that. So I've seen it before where obviously people have gone out and said, right, okay, I'm going to get an investor. Now, an investor can seem like a really good idea, and I've seen some very successful agencies work with an investor, but I've also seen some horror stories as well with investors as well, where obviously the investors come in and they'll maybe want 50 or 60% of the business up front. When you're starting your business, you go, well, actually, that's not too bad. Giving 50, 60% of my business, which is worth nothing, away is no problem at all. And then you get to 5 years down the line, you've grown this business massively, and every single month, the investor is taking out a dividend or a large amount of money from your business. And all they did was put that initial lump sum payment in from the very beginning. So that's, you've got to really weigh up what is the investor actually going to give for you. If they're going to give you ongoing help and advice that goes along with it, then that's great. But again, is what's their value of doing that? Are they going to be introducing you to new clients and new business opportunities? Then again, weigh up what the cost of that is. Don't just kind of go willy-nilly and go, yeah, well, he's going to give me 100 grand and he's going to take 50% of my business, but that's not too bad. The reason why you set up a new business is because normally you've been working as an employee for someone else. And if you've been working as an employee and they've been taking 70% of your take home, because you're normally taking home 30% of whatever you bill or 33% of whatever you bill, you're just going back into the same cooking pot all over again. Because what's happening is you're running the business, you're covering the overhead, and then someone's coming in and taking 50% of that profit that's left over. So is it really worthwhile to look at that? But it's an option. It's something to consider. If the deal is good, I've seen it before where, a mate of theirs was an investor and they only took 20% of the business. Wasn't too bad. They put in, 75 grand to start the business off. Really worked out really, really well. But that agency still did get to around about half a £500,000 profit, and they still were giving over that amount of money on an annual basis as a dividend to someone else. So it's a case of it works at the beginning, but not necessarily at the end. Obviously, if you're looking to grow your business, if you're funding any contractors or temp placements yourself, definitely look at invoice finance. Don't use your money to fund paying your contractors and think you're going to make more money from that. Having the money in your business and using those finance models is definitely a better way to go. And especially as well is quite a lot of people who actually finance and fund their own contractors don't think about the fact of, do I need insurance to cover if that client goes bust? So most people will go into it, they'll fund it themselves saying they're saving all this money, and then their client goes bust. Well, you've got no recourse. You can't get that money back. Whereas if you're using a solution such as someone like Simplicity or an invoice finance arrangement or other ones that are out on the market, what you're actually doing is not only are they providing the funding, but they're also providing the credit insurance or the bad debt protection that goes along with that to actually protect your business at the same time. So I would say that that's another option as well. If you need short-term funding, short-term lenders out there that will give you, kind of loans. There are some government grants, not very many, but there are some government grants out there that you can still get. I saw one of my agencies recently, they got £15,000 as a new startup as a grant. That £15,000 just covered the one director for a few months salary and covered a few of the overheads to start them off. Those are another ways to do it. They don't last very long, and there's quite a lot of paperwork to fill in. But for £15,000, it wasn't too bad for them, obviously. But and if there is anything, you can always borrow money from family and or credit cards. There's obviously 0% credit cards out there, and you can always use that as long as you can pay it back. I'm not saying go out and have a credit card and then obviously not be able to pay it back. This is about actually having the money to actually, as I said, cash flow for the short term, but you've got to actually maintain and make sure you hit those targets to actually get through that.
Great, thanks, Stewart. I think from what you're saying there then is the key priority is to choose the non-dilutive funding. When it comes to giving away shares in the business, you're losing an element of control of your own business, which hopefully will become a real success. Don't they say start off with the 3 Fs, friends, families and fools?
That's it.
See if you can get the money in that way, and if not, then maybe look towards a bank or a finance facility. Okay, thank you. Gemma, I know being in the Simplicity world, that's the key thing that we look to provide to our customers. Obviously, there are other providers out there, I must say, but with our experience, is there anything that you'd like to add from a finance perspective? I think Stuart's given a great overview of some of the key benefits, but from a financial perspective, anything you'd like to add?
Yeah, absolutely. I mean, I think when it comes to the finance side of things, there are so many different options out there in the market nowadays. Stewart, you've obviously given a bit of an overview there on a couple of the different options. I think everybody's just got to really sort of just find out what that best option is for you. I mean, I think you raised a really great point there, Stewart, where, you said, don't use your own funds. It is one of the biggest things that I hear all the time. Oh, we've got cash in the bank. We're cash rich. We've done a few perm placements, so we've got a bit of money in. It'll cover us to do a couple of contractors to begin with. But, people have always got to be thinking about that bigger picture, because if you are a really good quality consultant and you are doing a really good job, yes, you can fulfill your clients' needs with 3 or 4 contractors to begin with. But what happens when you're doing such a great job, they ask you for another 10? Where are you going to get that money from without having to turn that business away? So, that's always something to think about. But I think the really key thing that you touched on there, Stewart, was the debt protection. So many people will put themselves in that position and in so much risk without actually thinking about what could happen if the client goes bust or the client is just not paying. things can get messy very, very quickly. Certain sectors probably more predominantly than others, but with the state of the economy at the moment, we are seeing a lot more insolvencies with clients. And, that is one of the biggest things that I would say, regardless of the size of the agency that you are running, debt protection has got to be almost one of your givens. You have got to make sure that you are covered from that protection. Should that situation occur, because it is happening more and more regularly. If you're a fortunate recruiter that you haven't yet experienced that, then lucky you. But we've got a lot of customers that find themselves in that situation, and luckily with Simplicity, bad debt protection is a given. It is part of the solution, and it comes at no extra cost. So it's also finding out the different providers out there in the market. How is that debt protection provided? Because some people will charge extra for it. Some people will put it as inclusive part of the solution. So, you really do need to do your research. And, using somebody like Stewart, obviously you've got a lot of experience in the market, not only working in finance and back office, but obviously with what you're doing now. So it's absolutely do your research and make sure that you are finding the right sort of finance option for you, because some people will jump at what they think is a good idea. I love the way that you kind of put the investor side of things, Stewart. My opinion might be a little bit different to yours, but it's only because I've recently brought on an agency to Simplicity that were in that exact situation. And when they first started the business 3-4 years ago, the package looked great. They were going to get a salary. They were going to get, they could go out and get a car on the business. They could, they had their mobile phones. Everything was done for them, and they could just do what they did best, which is sales guys was obviously the recruiting. And 3-4 years down the line, they realized that they probably weren't making much more money than they were as consultants for their previous employers. And to get out of those types of agreements is really difficult. And there's obviously buyouts and everything as well, because they're shareholders in your business. So, there's lots and lots to think about. But I think that's where using somebody like Stewart, or, anybody that can actually help and advise on, the bigger picture, is definitely something to sort of consider when you're in this position and you're kind of doing a bit of market research.
Super, thank you both. So we have got lots of other questions, but we're running out of time. So I'm going to actually bring in some of the questions that we've had live today in the chat facility. And one of those questions is on the back of the advice that you gave, Stewart, in relation to pivoting and looking at other options. So what advice would you give to our audience today in where to start to tackle the EU and the US, or any overseas market for that state?
I think what you've got to do is you've got to look at your client base and see if they themselves have an international branches and things like that themselves. So quite a lot of companies obviously are, you might not be dealing just with individual clients. These clients might be part of a larger organization or a group of companies. And that might be your way in, where you can actually use the relationship you've got with your current clients to actually then leverage off and actually go off to those clients. So that's one way I would say. The same process of recruitment works exactly the same in the UK. So however you would do your BD to actually find clients in those in the UK, just do the same BD for the different countries. It's a case of that there might be a language barrier, but quite often it's all speaking English in some way. Quite a lot of the European countries mainly, are speaking English, and America definitely. You might just have to get out of bed a little bit earlier or later, depending on which side of the US you're speaking to. But it's speaking to them and just doing your BD in exactly the same way you would do. As I said, if you've already got relationships, it does make a lot more sense in that respect. You do have to maybe do a little bit of research on if there's any kind of legislation you might need to be aware of. But if you're using your UK contracts and your clients are signing up to UK contracts under UK law, and your clients in America or in the EU sign up to those contracts, I'm pretty sure it actually falls under UK law. So the only ones you probably have to get a little bit kind of a little bit further legal advice on would be if you're signing a contract with an American client and they're expecting you to sign their contract, I'd make sure that maybe you get a little bit of legal advice to make sure there's nothing in there that's going to obviously trip you up. You also have to think about things like currency, setting up currency accounts. And if you are placing contractors, can your current provider actually provide funding in those currencies as well? Because you don't want to suffer any currency losses. And as I said, it's about making sure that maybe you're dealing with maybe umbrella companies in those countries. And there's umbrella companies for the US markets, there's umbrella companies for the EU markets. If you need any help, then obviously just get in touch. But it's more a case of making sure that you're protecting yourself in the whole process. But you would be doing that on UK placements anyway. So as I said, getting into the UK and the EU and US markets, it's done exactly the same way as the UK. It's not any different except for time zones, really.
Great. I think that's super for our audience to hear that it's just as easy, just some considerations in relation to the country that you're working in. And the only thing just to add, having worked in the international space for quite some time in the banking industry, is make sure that you understand the key values of the country that you're working with too. Because quite often businesses will slip up by not understanding how that country operates and what are the key values to them as individuals. So you can get a huge amount of advice and guidance from the Institute of Trade for internationalizing your business. And there's so much help and support available via their website. And they also have reps as well, which I'm sure Stewart can introduce you to. Gemma, just finishing off with yourself. One of our guests today would like to know what piece of advice would you give to somebody that's looking to access funding? Where do they start? How do you know where to start? What options are there?
I mean, that's a great question for me. I would say give me a call. That would be the number one piece of advice that I would say. You know, I think you need to, like we said, you need to do your research. So if you're not going to be approaching funders directly, I would be advising people to talk to somebody like Stewart, somebody that has got an in into the market, but not necessarily as a financier, but somebody that knows kind of what direction to put you in. You know, other than that, yeah, just picking up the phone, really. You know, I am more than happy to talk to any recruiter. It doesn't really matter what your situation is, whether you are still employed and it's just something that you're kind of thinking about, whether you are just about to launch and you're kind of now thinking, oh, actually, maybe I should look at finance options before I actually start trading. Or if you're an established business that are already using a funder or, you know, looking to that next level of growth, I'm happy to have a chat with anybody. And if Simplicity can't help, I will know somebody else that probably can, or somebody like Stewart. So I would just say, reach out, use your network, and yeah, just get some advice, really. Speak to other recruiters as well, because lots of recruiters know a lot of other recruiters. It's one of those markets. So, you know, how are other people doing it? So yeah, I would just say use your network, make contact with whoever it is that you feel necessary, and yeah, see what your options are.
Lovely, thank you. So we're going to draw today's panel event to a close, unfortunately. Gemma, Stewart and myself, we could talk for hours and definitely would still have more to talk about. I really hope that everybody that's joined us today has found today useful and you've got some key takeaways from today's event. As both Gemma and Stewart have said, the main piece of advice that we'd like you to take away from today is that you're not on your own. We have a huge amount of support in the industry that you should really, you know, reach out and grab. The first port of call will be going to our online ecosystem, which is the recstartuphub.co.uk. All of our details are on the website. Each of our partners have their own page. Stewart's got his own page on there as well. So if you would like to get some further advice and guidance from Stewart or Gemma, please do head over to the website. We'll be sending out the recording of today's session. So if you did join partway through, you'll get a recording link sent out to you this afternoon. And we will be having future webinars. So please keep an eye on the website and our social media presence as well, as we'd like to continue this journey with you and your businesses. We really do wish you the very best of success with your growth plans. I hope that today has helped you avoid any future pitfalls. And if there is anything that you need from us, please do give us a call or drop us an email. Contact details will be available on the follow-up email. Alternatively, do head to the website. Enjoy the rest of the day and have a super successful year. Bye-bye.